Markets this morning are lower. Let's take a look at where we stand. Dow Industrials down about 100 points. Investors closely watching the surge in COVID cases amid new lockdown measures. The Dow finishing lower after last week's record close. Take a look at the Dow Industrials yesterday, down 148. Joining me right now is Lebenthal Global Advisors President Dominick Tavella. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and senior writer at the Wall Street Journal, John Hilsenrath. Great to see everybody this morning. Dominick, kick us off here.
Good morning,
Your
Maria.
Thoughts on now all of the news around COVID and this first vaccine in the UK? While the number of COVID cases rises, lockdowns, people in California seeing this new lockdown set into place yesterday, and yet markets feel like the vaccine is on the horizon. What's driving markets, Dominick?
So this is the tug of war between the reality on one side of the fence and the possibility. The reality is that coronavirus is still here. It's increasing on a daily basis. We have 2,000 deaths a day going on, projected to 3 and possibly 4,000 in January. Lockdowns, draconian lockdowns in some cases, that's going to shutter our economy again. And the possibility that as this vaccine enters our social system and people get vaccinated, the economy can open again. So headline risk is probably the biggest thing going forward.
Dow Industrials yesterday lower, but the NASDAQ was up. We continue to see this rotation into tech. Do you want to buy growth here?
You have to be very careful, Maria. What's going on, investors always are looking backwards. They're saying what's working, what worked in the last 12 months. And clearly technology and healthcare were 1 and 2 leaders of the sectors of the economy and the markets that have done really well. But going forward, as this economy starts to open up, other sectors are also going to open up. We saw in the last 12, 15, 30 days or so, this rotation away from tech to the closed economy stocks, including oil. Who would have thought oil and oil companies would have done better? Now, again, this is going to be volatile. It's going to be short-term, way ups and downs, headline risk, but you need to start rotating your portfolio. Yesterday's winners aren't necessarily going to be tomorrow's winners.
All right, let's talk coronavirus stimulus. How important is another deal? Many on Capitol Hill looking to hammer out details surrounding liability protection for business, other working during the 19 pandemic. This is the potential government shutdown at the end of the week is looming, Dominick. How important would be a stimulus package right now for markets? Do you think we'd see a reaction?
I think the markets would react positively, but look at the human part of this, Maria. There are between 6 and 10 million people, 4 million that have completely dropped off the unemployment rolls, that are no longer getting any kind of income at all. Small businesses are holding on by their fingernails, and yet Congress is still fighting over this. Human beings need to pay their rents and need to put food on the table, and Congress has to step up to the plate. So the markets would react positively to that, but the human toll is way more important. They have to step up to the plate, put politics aside, get us through this next 30 to 60 days, save people, put food on the table. This is way more important than politics.
Yeah. John Hilsenrath, what about that? Does it seem likely to you that they attach any coronavirus stimulus package, $900 billion, to an omnibus bill, keep the government open, buy time?
It looks like they're moving in that direction. And one thing that I find really interesting about what's going on back here on Capitol Hill is that we're starting to see Republicans and Democrats behind the scenes, particularly centrists, working together to hammer out a deal. And, I don't know if this is a one-time thing or a possible sign of how the next Congress might behave, but that'll be an interesting development. I wanted to point out one other thing and hear what Dominick has to say about it on the investment front. And that's that it's striking to me that while U.S. stocks are rising, the dollar has been falling. The dollar is down by almost 4% this year. And, you were talking about rotating into other sectors. I wonder why the dollar is falling and whether what we're seeing is some rotation into international stocks and international growth.
So to your point, you look at the multiple on U.S. stocks right now, based on where your earnings projections are for next year, you're looking at a 24 times multiple on the S&P 500 versus 18% on European stocks. So from a valuation perspective, European stocks are a lot less expensive than U.S. stocks. Lower interest rates here in the U.S. make U.S. Securities less attractive than they were in the past. We expect the dollar to continue to weaken. That'll be terrific for U.S. exporters, but rotating to your portfolio to start introducing international securities, particularly emerging markets, I think is smart. It might be a touch early, but you can't always buy at the bottom and get out at the top. You start incrementally adding to that sector.
All right, we will leave it there. Dominick, great to hear from you this morning. Thanks so much.
Thank you, Maria.